Hi, I'm Jess. I am a wannabe oil trader from the UK who presents my videos on YouTube to hopefully inspire other beginner traders to learn fundamentals for the market they like to trade or to get out their comfort zone a bit more by documenting their journeys publicly. Um, I'm going to try and get through this video without having a massive coughing fit. The last few have failed. My partner's daughter brought home some nasty term germs from university, passed them on to her brother, her dad, and now they're trying to infect me. Luckily, I've got a nice, strong, tough immune system, so I'm just going to need to up my fruit and veggies even more, and hopefully I'll be good. So we're finally through January. I know it's been a real long, hard, painful, slow month for many people. Personally, for me, it went really quick. I had loads of stuff going on. So yeah, even though it went quick, I'm just glad it's over and into the year properly. Um, I didn't take any trades in December. Thank you to anyone who watched my last video. So I've been quite keen to ease myself back into trading. I will go through my trades in just a moment. Now we're going to look at the fundamental chart just real quickly for the month of January. So as you can see, it was massively a tale of two halves. The first half of the month was very much bullish momentum. The second half of the month, we erased all of the gains made in the first half with the bearish factors. So I'm going to go through them now, and I'm going to start with the beginning of the month and what caused price to lift up 8% from the start until the middle of the month. And that was mainly the US imposed sanctions on Russia. They are limited how much oil can be produced and then exported out. That's to try and hurt them financially in a bid to try and get them to end their war with Ukraine. So while that was massively lifting up price, you had 4% this week, 4% the second week. There was a kind of like a knock-on effect. There was sanctioned oil on vessels trying to get into China, which were then being turned away at the port. That also helped price lift up. And you also then had the big freeze in the US, which then created a massive demand for heating fuel. It was over the whole Northern Hemisphere, not just the US. And therefore, the refiners were buying up loads of crude to refine it into heating fuel for people to heat their homes. So there were other bullish factors, quite a few of them actually. You're welcome to zoom in, screenshot on these areas that I've highlighted in yellow to see the other factors that affected each week. Okay, so that was the first half of the month, nearly up to 79.50. Then this is when the ceasefire was really being confirmed to be official as of Sunday here. Trump got sworn in here. And as you can see, then it was just a downward spiral for price for the rest of the month. So Trump and his policies, Trump is ultimately bearish for price, certainly in the long term. However, he does have some policies which are bullish for oil price, such as the Russian sanctions that I've just mentioned. So here we saw some profit taking from the big banks and investors because they weren't 100% sure exactly what Trump was going to do. Could have there been sanctions on Iran as well, which could have then created another rally up. This could have just been a pullback. And that basically the investors weren't sure. The news was very mixed from all of the analysts this week as to exactly what Trump was going to sign off in his first few days in office. Also, ceasefire was pushing price down, and the overriding bearish sentiment on the oil market, which is the fact that supply is due to outweigh demand in 2025. And that isn't going anywhere. So actually, I just want to quickly mention the DeepSeek, the AI Chinese startup company, which didn't really have too much of an impact on oil price, but it definitely did for tech-related markets such as NAS or the US 100, which is the top US 100 tech firms. yeah, in the country. So that market saw huge impact with that DeepSeek news. But this is the candle here, DeepSeek, and yeah, it did push price down, but there was just too many other things going on in the market for oil to be truly affected. Okay, so that was a snapshot of what happened in January. We started the month on 71.52. We ended the month on 72.96. So even though there was that huge skew to the upside up to nearly 79.50, or as I said, all of those gains were erased in the second half of the month with the Trump news ceasefire and just the bearish overriding sentiment. So after all that, price actually ended up $1.45 higher than where it started at the beginning of the month. So that was that. Let's have a look at my trade chart and see how I navigated my way through this month, last month. You know what I mean? Right, just wait for that to load up. Haven't had the coughing fit yet. Good news. Right, so this is the first week. So yeah, the first week of January was actually tiny because the first was on the Wednesday. But I just jumped right on in, both feet in, gung ho. Although it was based on the higher time frames being massively oversold. We hit the edge of this trend line here. It was my first trade of the year, 73.50. It was a loss. I got completely taken out by Russian sanctions and the other bullish news factors that I just mentioned on the other chart. So it wasn't the best start to the year, but it wasn't a massive biggie, like 35-point loss. Not a huge lot size, nothing to cry about. So going into week two, price kind of ranged a little bit, but it came to 72.50, which my people will know I like that zone. It's a good area of support and resistance. I had rejection from this trend line and also from my 200 moving average. I'm just going to pop that on so you can see it. It's my turquoise line here. And actually, it was a great move, great idea. It played out nicely. As you can see. However, I went to work on the Friday here and got shook. And because I've been in this situation before where I've been at work, looked at my trading profit, decided to leave it, checked my trade at lunchtime, it's reversed back to break even or tiny profits. And I just got shook and I just didn't want that to happen again. So I pulled all profit on all my positions here. Not huge lot sizes, not a huge move, so not massive profit, but it would have been a great move if I'd have just had the balls to let it run. Here I was into week three. I was clearly trying to catch the reversal. I thought that the bullish rally had kind of run out of steam. I was kind of hitting my trend line, another area of support and resistance. Obviously, the high time frames were all now massively oversold. And yeah, that actually would have been a nice trade from this zone if you'd have put enough of a lot size on it to actually make this small move mean something. I could see after several attempts of it coming down, going up there, it actually wasn't going to go past this area of support. And then I took some profit here, and then the rest, the runner that I'd left, because I didn't leave a runner here, so I wanted to leave a runner here, right? That just went back to break even. So nothing too exciting there either for week three. So this is where the true reversal happened here. When the ceasefire was announced, and obviously then Trump's falling just really gave that downward momentum some real traction. I didn't take any trades at all. I kind of was watching and waiting. I was a little bit scared that Trump was going to impose sanctions on Iran and price would go shooting up again. So I just kind of watched and waited here. Was keen to take a technical entry. Didn't have enough confidence in my fundamental analysis alone, even though when I record news on my Instagram, people will know how I record the news with red and blue dots to signify direction. I just didn't have enough confidence, even though it was a massive red circle week in my book. I just didn't have the confidence. So I placed a sell order. These red circles here are sell orders. I never really place an order, but I decided to on this occasion. This was the right zone, I think, but the timing was out, I was too late and price took off without me. This was a missed opportunity. Price came down, another missed opportunity. I set a sell limit here in week 4 after having a really non-eventful week 3. Set my sell limit, was literally a few points out on that one, so that was pretty annoying. Then priced it exactly what I wanted it to. So again, that was a non-starter right until the very last couple of days in my very last day of the month. So this was Friday morning. I took the sell from 72.57, even though price had broken trend slightly here, it had come back into trend, was rejected from a trend line. I had my moving averages on the 4 hour, I had my 50 moving average, and then on the 2 hour, I had my 200 moving average. I'll just pop them on so you can see what I mean. This is my 50 here that it was rejecting from, and on the 2 hour, which have been following this trend line all the way down, giving me confirmations and all of those missed opportunities, and here as well. However, the trade played out for a little while. Yeah, I should have closed out here, but obviously I didn't. And then the Trump tariff news really kind of took hold of the market. Price shot up. Obviously, I hadn't moved my trading to break even, and I got taken out at a small loss to close the month right before the market ended, and then into February. So all in all, 2 losses, 2 wins. Not that exciting, eh? Boring, just like the month of January itself. Let me just turn those moving averages back off. Okay. So yeah, overall it was a break-even month for me. But on the favourable side, slightly a few quid in profit rather than at a loss. So it was just missed opportunity central, and I think that's why I felt a little bit frustrated with the market in January, and I feel very, very stagnant. And I think the main reason for feeling stagnant is that since November, my psychology's changed a little bit with the trading. The urgency isn't there because of the crypto pump. I've been dollar cost averaging into crypto for about the last 18 months, and price wasn't really going anywhere on its own. The only increase in my assets was my capital that I kept putting into it every month, sometimes more than others depending on what was going on, right? We all have our money problems. So yeah, then Trump got elected beginning of November. There was a Trump pump on crypto, and it made me think, wow, okay, I can actually make money on crypto. I don't have to rely on learning how to trade to build a financial future and freedom for myself. So I think that was the psychology. I then basically took December out of trading, probably because of that. I felt, so I got some money, it's all right. I can take my foot off the gas a little bit. Plus, I've been looking at the charts all year. I've been looking at news all year, and I just needed a bit of a break, right? It was coming to Christmas, and that's what people do generally, is they do take their foot off the gas in the wind down to Christmas. So there's all my kind of reasonings. However, I am very aware that I can't stay out the market for too long, certainly in terms of trading, because I'm just going to completely sort of like lose my momentum, lose my feel for it all. So I was keen to take more technical entries in January, which I did. The news was hard to decipher for me because, particularly in the second half of the month, because of the mixed signals I was getting from the analysts about Trump and his policies. From a personal perspective, I had problems with my car. I had to travel on public transport more, which meant just more time away from home. I had to spend more time actually at my clients' houses rather than bringing the work home to do while I'm looking at the charts. So I just feel like for the missed opportunities, maybe if I was at home more throughout January, if my car wasn't broken, it needed repairing, then maybe if I was staring at these charts more, saw how much this trend line was just being hugged and kissed by price for the second half of the month. Excuse me. Oh, nearly got there just at the end, damn it. At least it wasn't a coughing fit. So yeah, maybe I'd have been more inclined to actually capitalize on some of these missed opportunities if I'd have been staring at the charts harder rather than sitting on a train with no signal. And everything, just feeling so much longer without a car. So that's my excuse anyway, but it is quite a valid excuse. Um, so I think this is why I'm feeling a bit stagnant. I also think that I'm facing a classic trader experience, which is last year I worked out my strategy and then I had some real flying months and I was like, yeah, I've got this, woo! And then things just go really flat and stagnant, or you have loads of losses. And I'm on Instagram. I look at trading influencers, and this is a common complaint. So I'm not going to get too beat up about it. How I'm going to counteract that is just by throwing myself into the market in February, taking more trades, feeling the losses, celebrating the wins, spending every single spare minute looking at the charts again. Because quite honestly, when I was staring at the charts more, that's when I had the most profits from this market, which was kind of like spring, summer last year. So, in terms of going forward, that's what I'm going to do for February, and I'm going to reactionary because all of the analysts are saying for February and beyond that it's just going to be super volatile. And that's mainly because of the Trump policies and how the market digests them, the knee-jerk reactions to certain policies, and then to the broader trade war, which is definitely starting to brew up. But that's more February news. That's what's going on right now as we go into February. So in terms of price, I just see price going down and staying more down just because of the overall bearish sentiment of supply outweighing demand in 2025. We've also got OPEC starting to unravel and release some oil back into the market come the second quarter, the beginning of the second quarter. Which will start to impact on price. Now, Chinese manufacturing hasn't really improved, so overall their demand isn't looking too fabulous. The tariffs, as I just mentioned, the trade war, the US tariffs on China might force them to seek new new energy alternatives, or just really carry on with their renewables industry. It's a little bit all over the place. It's a little bit disjointed in terms of prediction, but I'm saying down with some quite volatile spikes up, kind of like what we're already seeing in February. So on that note, I don't know how I'm going forward, how I'm going to carry on presenting my experience of learning the market with you. Am I going to carry on doing videos? Oh my God, my battery's going to die. Hopefully that isn't going to die too soon. Or am I going to go back to Instagram stories? I don't quite know at the moment. It's something I need to think about. I've got a big year, hopefully a move up country, which is quite a big thing for me. But I'll have a think about that and update you next month. I'm just looking forward to getting my teeth into the market and just being more immersed in trading in February. And I look forward to updating you on that next month. Over and out. Thanks for watching and have a good one.